Hi, this is Atmir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 20th of November. Starting off with the FTSE 100, and here you can see we've basically found support at at and around the 50-day moving average there at 95.07, and above that, looking for the market to at least give us an end-of-day close back above the initial November support there, 95.74. We can get that. We can class the sell-off from the highs as being a bear trap rebound. We'd also be looking for the RSI to get back above neutral 50 versus 45 at the moment. Worst case at the moment is that we need to test the floor of that channel there from back in June, so that's around 94.40. But at least while we're above that 50-day line, we're expecting this kind of revival that we've had since back in April, where the 50-day line's just been the support. That was the case in basically July, September, and last month, and obviously this month as well. So basically buying the 50-day line. The message there. Moving on to the DAX, which is in a rather sorry state earlier this week. Still remains in a rather sorry state in the sense that we are still below the 200-day line, 23,400. We need to get an end-of-day close back above that to take us up to the 50-day line, and I suppose the early November trading zone around 24,000. Still the chance of a move down to fill that gap from April down towards 22,600 as a worst-case scenario situation. But we're probably hoping and expecting this market to get back above the 200-day line, which is still rising relatively soon, if not today, maybe for the end of the week. But the 2-day island reversal and the gap down that we've had earlier this week are clearly not a very good look, but almost the worst look you can have really on that. Moving on to the Dow, and here the picture is that of a market which is stabilized at the lower levels. The current situation is that we're supposed to be found support at early October lows there around 45,800. We'd like to see the market back in the channel, or at least the channel maybe can be sort of fitting to the price action that we've got at the moment. Perhaps we're like that in the sense that the channel could be one from the end of June and finding support there. But probably in terms of the bull argument, you'd be waiting for an end-of-day close back above the 50-day line, 46,600, or the RSI to get back above neutral 50 versus 40 at the moment before assuming that the worst is over. Next on the list is Bitcoin, and here we've got a situation where we're still struggling in the sense that we're still below the old May support there around 93,000. While that's the case, we still have the risk of a move down to the March uptrend line around 86,000. And the worst case would be that we've got to test the full width of the trend channel there, possible trend channel there from back in the summer of last year, and that would be a 76,000 handle, which would be rather painful, but I suppose it's particularly painful given that the low of the year so far has been around the 75,000 mark. In terms of the upside, if we do break above 93,000 on an end-of-day close basis, looking for 98 to 100,000 as the initial rebound target. On to Ethereum, and here the good news was that we managed to stay on the right side of the 3,000 level. At least that was the situation yesterday, but this market's still struggling. We had a sort of second or third uptrend line there that we're hoping that this market would find support at. Just about doing that at the moment. That's around the 2970 level. At least while we're above that, looking for recent resistance around 3250 as an initial target, but probably not really feeling like coming up with much more on the upside until the current situation resolves. In terms of the nightmare scenario, probably it would be down towards 2770, 2800, which was resistance back in May for this market. On to gold, and here we still have the feeling that we might have to test that 50-day line. It'd be difficult to have a test of support without touching that 50-day line, which is currently at 39.64. But at least while we're above the 50-day line, looking for a retest of recent resistance around 4,200. Best case at this point would be up to 4,600 in that November resistance line projection, maybe by the end of January, something like that. RSI still holding above neutral 50, so that is a positive at the moment. Moving on to the stocks, and a bit of a battle royal here with amazing AI. It looked as though yesterday we found the floor at 0.2, and for an hour or two, the shares did rebound, but you can see there's resistance there at 0.28 mid price. But it still looks as though we've got support there just below at and around that 0.2 level. So people who feel like a brave bottom fish may be looking for that, especially given that the news, the improved news from the company, probably doesn't justify the falls that we've had before the improved news came. Moving along to a stock which is still new to me, maybe new to most of the people watching this video, Ampeak Energy. Here you can see that we're trying to get up to the top of that rising trend channel there. Our first target around 3.95 pence. Probably need another go now, but at least while we're above I suppose the recent broken resistance around 3.1 pence, still looking for 4 pence over coming days, maybe weeks. On to Atlantic Lithium, which it's been it's been rather stronger than maybe most people would be thinking. At the moment, we're in what looks like a mid-move consolidation, bull flag around or either side of our 11 pence. Initial target above 11 pence, we're looking for as high as 17 or 18 pence, the old December resistance. And certainly while we're above recent support, an old resistance from September around 10 pence, would appear that Atlantic is on track for decent move to the upside. Really looking for this to complete the right-hand side of a saucer type recovery. Moving along to Eurasia, which I haven't looked at for a while, and here see positive noises there in the chart in the sense that, well, at least in terms of the moving average, the 50-day line there at 3.42 starting to rise now, and above that, looking for the top of a falling trend channel there from back in March, maybe a little bit higher than that, in fact, up to 6 pence by the end of next month. If you're looking for evidence of the stock recovering, then probably at least an end-of-day close, 4.3 pence plus is what you're looking for to take the shares back up to 6. Obviously, we had a full storm last month with the temporary break of the 200-day line, so hopefully second time lucky for the bulls there. In terms of Georgina Energy, the shares have been, or the company's been kicked and punched rather nastily by certain forces, but seems to be still fighting back. What's interesting here is that any rallies that we've had since July towards the 200-day line have been sold into, but the shares keep on trying, like Robert the Bruce, and hopefully we'll have a sustained move to 6.6 pence over coming days or weeks, perhaps 6.6, a decent end-of-year target for the shares after what has obviously been a pretty tough time for the company. First of the stocks which has exposure to WeShop in America is Hot Rocks. I haven't looked at this stock for a long time, since June, when it was doing well with the Bitcoin treasury companies. Here you can see that we've got a rising trend channel, and the top of the channel I'm going to draw as the upper parallel heading 4 up to 3 pence, and looking for that while we're above a recent support around 1.2 pence. But the Hot Rocks exposure to WeShop should probably be kicking in rather more than it has done already, but we'll see how WeCap is doing in a minute or two. Moving on to Hydrogen Utopia, where we've had support come in above old resistance around 2.1 pence. Initial resistance here in terms of the line drawn from last November is around 2.7 pence. End of day close or a weekly close above that, we could be looking up to 5 pence as a best case scenario target for the end of the year. But the key here is staying above 2.1 pence. Ingenta is next, and here, I'm presuming nobody really looks at this stock, but somebody has to. And here we've got a retest of the initial target there, which is currently around £1. Above £1, looking for the upper parallel of that rising trend channel base from this time last year, as high as £1.30, and that would be a best case scenario target for the end of the year, so the end of December. Had an RSI 50 plus rebound to get us going again, so hopefully the shares are on their way, especially after gapping up last month and finding support on dips above a rising 50-day line. Pantheon is next, and here the picture is that of slow recovery. We've got a rising trend channel base there heading for 36 pence, above the 50-day moving average at 26 pence, looking for that to be hit by the end, or perhaps as soon as the end of this month, presumably. Placings are out of the way there. Roadside real estate, I saw somebody tweeting about that, and we've always been very bullish about this situation, and the shares have very kindly responded accordingly. Here you can see that we've got a rising trend channel there, which was the original rising trend channel drawn. That's heading for around the 66 pence, 68 pence level now. Looking for that by the end of this month. Best case scenario target would be the upper parallel of that rising trend channel, black line there, heading for up to 87 pence. We're looking for that maybe by the end of January, something like that, to give the shares 2 months or so to get up there if we have the momentum building on the situation, which obviously at the moment it looks like we have. Upside about it, at least while we're above that recent support there around the 55 pence zone. On to the aforementioned WeCap, which has its stake in WeShop in the US, which I'll actually flip over to in a minute. Here you can see the shares are up 27%. We were looking for 4 pence as the target here. Obviously, we had that very strange rug pull on Tuesday, which one could maybe have a few questions about, but at least in the near term, while we're above recent 3 pence resistance, looking for 4 pence plus again on WeShop, and really it should be rather more than that. You can see on the left-hand side of the chart what we'd be looking for. If this wasn't the London market and so reticent, probably be looking for 8 to 10 pence by the end of next month on the basis that that was resistance on the way down. But obviously, somebody is trying to make sure that this situation only goes up in a slow but steady fashion rather than a quick fashion. Moving along to WeShop itself on the NASDAQ, and here you can see that yesterday the shares were up nearly 500%, so plenty to shoot for. Well, there should have been plenty to shoot for on the upside as far as WeCap is concerned. Back in the UK, and we're looking for or looking at Westmount Energy. Here you can see that got a very positive consolidation in the recent past. Gap through the 50-day line in last month and finding support above it this month. So it's still looking for a 3.3 pence target and looking for that by the end of the year. That's the top of a triangle there from back in 2023. Finishing off with Zenith Energy, which seems to be reviving with its energy project strategy. Here you can see that we've actually hit our first target there around the 4 pence level. Above that, looking for the top of a triangle there from back in July as high as 6 pence, and looking for that by the end of next month. Ideally, we stay above the 50-day line, 3.4 pence, whatever happens. That's it for me today. More updates tomorrow.